But the stock of the day is Goodman Group after it released a trading update. As of the end of September quarter, like-for-like net property income growth on properties in partnership rose by 4.9%. It has $82.9 billion in total assets under management, and it's forecasting full-year earnings per share growth of 9%. It has no drawn debt maturities until late 2025. The company expects an FY24 distribution of 30 cents per share. So let's take a look at where the share price is currently sitting. Intraday down by more than 1%. So, guys, Goodman Group has consistently been touted as best in class, not just in the commercial property space, but really property space in general. And there's such a demand for commercial property distribution centers, et cetera, et cetera. Why is the market reacting negatively to this?
Yeah, you're right. It's probably the best quality player in that space. It's more of a listed private equity. When we talk about those kind of players who can adjust and play the market well, Goodman is up there with the best of them. As good as it is, I think the thematic is hard at the moment. It's had a decent bounce off from the lows. I think the sector has a lot of headwinds and the market doesn't know what to do with it. Now, most of the positives, everyone knows. It's been a thematic for a long time. I don't think that's going away anytime soon, but that's relatively well priced. But most of these things, as with anything, carry a fair amount of debt. So when you're looking at interest rates, you're looking at recession risk rising, there's going to be uncertainty in that sector. But if if you had to pick a stock to be in the REITs, this will be the one. Mm-hmm. And you can, you look at those probably Macquarie, Wesfarmers, Saul Pats, Infratel. There's a few, all these listed private equities that trade in multiple assets. You back them for multi-year play. In the shorter term, I think the market is uncertain, so this will be under pressure. But I think the longer term, when you have pullbacks in these kind of stocks, you buy them and you hold them for the long term. So I like it in the long term, but in the shorter term, we're not in that sector. We haven't been for a good part of 2 years, and we're comfortable staying out of that sector.
So you're going to avoid that for now?
Yeah.
Gaurav?
Look, I don't have much to add on Goodman. I think every guest you've had on the show probably says the same thing. It's a wonderful quality business and it's expensive. And that'd be my take as well. I will also add, though, this is a uniquely complex business, and I do wonder how many people who are actually buying this thing understand what they're buying. Because I would throw the challenge out there to go and have a look at the accounts and try and piece together how they flow together. As a professional, that's something we sort of have to do.
Yeah.
Understand how each account links together and what it tells you about the business. And I find that difficult to do with Goodman because it's complex. Not that there's anything untoward.
That's what I was going to say.
Management's fantastic. It's just inherently...
It's not accounting tricks that you're applying.
No. In fact, there's probably more clarity in Goodman than there is in other businesses of its ilk. The balance sheet is absolutely pristine. Management's well incentivized and highly regarded. I like the business a lot. It's very expensive and it's extremely consensus. I find it hard to believe that this thing is mispriced or misunderstood. If anything, it's probably over-owned. And I think there's I keep hearing all the time that this is some sort of data center play. 98% of the earnings here are really about industrial property.
Yeah.
And the data center is very marginal. In the update, they sort of gave an indication of the scope of their data center entry. We are talking peanuts. I think this is a really long-dated option. I mean, you'd put your money on management to see it through, but these guys are thoughtful allocators of capital. They move slowly, and they're still building out their logistics center as well. So I think that's more of a long-term thing rather than a short-term thing. And it's driven the share price up a little bit. It looks expensive to me.
Yeah, well, to your point, Morgan's is an ad. Morgan Stanley overweight. Macquarie outperformed. Citi buy. UBS buy.
Yeah, I wouldn't be buying that.
Yeah. Ords is a hold. So there you go.
It becomes very easy. This is almost the definition of a low-risk stock for an analyst to recommend. Incredibly complex. You don't really understand it, but you don't get in trouble for sticking a buy on it. Yeah, and if you stick a sell on it and it keeps going up, you look stupid. So I think this, if anything, there's a bias towards this being just expensive.
I mean, the whole sector, a bit like retail, fell the hardest in the pullback from 22. And then it all bounced, and then most of them have come off, and so some of them haven't. I think the market is right, and it'll probably come off, and you'll get it cheaper. And you're right. In the longer term, these guys are going to be pretty good. And you buy in that sector. If you had to pick one, most people will pick this one, and for the right reason. But I think the time is probably not now.
I've got a list on my watch list about 30 stocks. I call it the bench, and that's the stocks I follow. And if I'm going to buy something, 95% of the time they'll come from the bench. Occasionally there'll be some opportunity outside the bench, but Goodman sits in the bench.
Yeah.
Like, it's that stock, it's in my top 30 list, that it sits on the bench, and I'd like to own it one day, but not under these conditions.
I just pictured you
Yeah.
as a coach with a whistle.
Yeah, I know. I can just
playbook.
imagine it. Gaurav, coaching his
Yeah.
own son,
Yeah.
benching him, going, "Nah, you're sitting,
I
you're
didn't
sitting, you're sitting."
I didn't have a name for it, then a friend of mine says he calls his watch list the bench, and I nicked that and I
Yeah.
called mine the bench as well. I just
Oh,
really
cool.
liked it.
Yeah, that's a good idea.
All right, let's
Yeah.